Hello everyone, this is Sahur. I will be with you to review UK and Europe inflation data and market reactions. Starting today, actually, we started with a little bit more important data as well, such as current account data from New Zealand and export-import numbers from Japan. Both countries, because of much bigger weakness in the import section, which shows another weakness in the domestic demands in these countries. Uh, both of these countries, they provided a little bit better than expected trade balance or current accounts balance. That's as mentioned earlier in the other videos also. Uh, mm, the trend of the less imports in most economies that they are publishing data in the last weeks, showing that the overall trend of weakness in the economy, and we should be more careful about that while we are looking at the trade data. Later in the United Kingdom, we had inflation numbers. UK inflation numbers showed somehow the steady data, steady numbers, while the core and headline inflation both increased by 0.3% on the monthly base. Core inflation higher than 0.2% that we had in July, while the headline inflation, which increased by 0.3% monthly base, is almost 3 times higher than 0.1% printed number in July. On the annual scale, core inflation slightly eased to 3.6%, while headline inflation stayed steady or remained steady at 3.8%. These data confirms that the generally inflation is still steady and sticky, while we should be careful more about the economic data as well, other economic data as well, which other economic data is showing the weakness in the British economic growth. So the central bank with these numbers, central banks in United Kingdom, which will have in policy meeting tomorrow, uh, probably with the 8 against 1 expected vote, they're going to decide for holding the current rate, because with these numbers and the inflation, it's so risky to cut the rates right now, as it can increase again the inflation in the markets. Well, the other economic data in United Kingdom, they had some positive signs in the previous months, but still, they're, weakness soon, in contraction soon, most of them, especially the manufacturing and service activities. Uh, with this data, our expectation from the Bank of England will not be changed for rate cut, and even with the big votes for not cutting the rate, even with the big number of the votes for holding the current rate, as the market expecting 8 votes to hold the rate at 4%. Only one person or one MPC member can vote for cutting the rates by 25 basis point. Let's see. Wait and see by tomorrow. In New Zealand, also we had inflation numbers where we saw the inflation is slowing down. On the monthly basis, it fell from 0.4% for the core inflation to 0.1%. Headline inflation is to 3.3% from previous 3.5%. In Eurozone, core inflation fell to 2.8% from previous 3.7%. I'm sorry, I'm talking about the house price index. Before going to let's mix the numbers somehow. Before going to Eurozone inflation, I have to mention that the house price index in United Kingdom also fell to 2.8% from previous 3.7%, showing that inflation in the housing market is slowing down, but still the high 2.8% also still the high. But on the other hand, I have to mention that the main reason of the lower price growth in the housing market is because of the lower demand in the market. In the lower market demand is sending the house price index much lower than previous months. In the Eurozone also, we had inflation numbers. And on the monthly scale, the core inflation increased by 0.3% and headline inflation increased by 0.1%. On the annual scale, if you look at the annual scale, core inflation increased by 2.3%, repeating the same number of the previous month in line with expectation. And headline inflation stayed steady at 2%, as I mean, we saw the previous month also, but the market was expecting to see the headline inflation slightly increase to 2.1%. Generally, the data says that the inflation somehow is under control in Europe. And again, I have to say, lower inflation in the Eurozone is because of lower demand. And this lower demand is sending the inflation lower in the Eurozone, so we shouldn't be too much happy for this lower inflation in the Eurozone. Mostly the central bank, with looking at the other data such as trade data, such as retail sales, the expectation of the central bank in Europe is increasing for another rate cut. So most probably, we're going to have at least one rate cut before year end, because these inflation, even thought if it's low, but it's better not saying even thought it's low. This inflation is low and in line with the market expectations, in line with the central bank targets. So it can let the central bank to go for a slightly more dovish policies to support the economy. So that's why we can say that the Central Bank of Europe can cut the rates at least once, with 25 basis point later this year. As a market reaction, looking these data, how these data moving the markets, we can see that the euro against US dollar slightly eased, and mostly because that the dollar positive movement that earlier today we had. But generally, the euro-USD uptrend is continuous. Sounds like this because we expect to see the rates cut in United States, but holding the current rates for now. For the euro, that can increase the euro's power against dollar, but at the same time, we can see that economic numbers in the Eurozone is weakening. So after this rate cut in Europe, in United States, maybe in the short term, still we can see the euro using uptrend. But after this rate cut, then we are not expecting the rate cut at least for the 45 days. So during these times, till next central bank meeting in United States. Between these two meetings, euro can get slightly weaker against dollar because of the weaker economic data in the Eurozone and positive data that we have in United States. These numbers cannot be positive for the European stock market as well, because, as mentioned, confirming the low rates is mostly because a low inflation rate is mostly because of lower domestic demand in the Eurozone. On the other hand, in United Kingdom, with the cutting the rates, today's expected rates cut in United States, and holding the rates for tomorrow's UK meeting, BOE meeting in United Kingdom, we can expect the British pound to get slightly stronger against dollar index if we don't have the surprise in the market. But if you have some surprise in the market, especially tonight's meeting in United States, that can support the dollar index heavily. Other side, if things goes through as the market expecting right now, with 25 basis point rate cut and counting on another rate cut, at least one more rate cut later this year, things like that, it can happen and continue in line with expectation, and the central bank in the United States emphasize on database decisions, then we can see that the GBP USD to continue its uptrend, and British pound gets slightly stronger, especially if tomorrow's rates counts, like the vote counts become at 8 against 1 for holding the current risk, then the pound can get more stronger. About the British pound and its movement after tomorrow's BOE meeting, also we're going to have another video. However, after Fed meeting, also we will have another video to go to detailed decisions of the Fed's meeting, and if you see that what's going on in the dot plots and so on. As for the stock market, British UK 100 or British FTSE can somehow have a negative reaction to these numbers, because these numbers can confirm that central bank in United Kingdom can hold the current rates. UK FTSE or UK 100 is in very critical levels that falling under these levels, especially 9,200, can send this index much lower prices. Don't forget that Donald Trump is traveling right now in the United Kingdom. He's gonna be there, I think, 2 days. So maybe between United States and United Kingdom, they're gonna have some trade deals. If so, maybe in short term, market can take advantage of this. This news, but still, they are not in a position to hold the current levels. So that's why we are still, again, considering these data still, we are not positive about UK stock markets for now. Yeah, that was the inflation numbers in United Kingdom and Eurozone and the market reaction. If you had any other question, don't forget to write in the comment section. I'll try to get back to you as soon as possible. Have a good time. Bye-bye.